Rent and price trends are critical indicators of a rental market's strength, property appreciation potential, and overall investment opportunities. By tracking historical rent growth, rent-to-income ratios, property prices, and cap rates, small apartment investors can evaluate rental income potential and make data-driven investment decisions. Understanding these trends allows investors to assess market performance, identify growth areas, and optimize their strategies. Importance of analyzing rent and price trends. Evaluating rental income potential. Understanding rent trends helps investors assess whether rental income will cover operating costs, generate positive cash flow, and support investment goals. Assessing market strength rent growth trends provide insights into tenant demand, affordability, and market stability. Strong rent growth typically indicates a robust rental market. Property value appreciation. Monitoring price trends reveals potential for property appreciation, helping investors estimate future returns and identify growth markets. Analyzing rent trends. Historical rent growth rates. Reviewing past rent increases provides insights into market trends and potential future performance. Compare rent growth rates to inflation and wage growth to assess sustainability. Rent-to-income ratios. This metric evaluates tenant affordability by comparing average rents to household incomes. A high ratio may signal affordability issues that could limit further rent increases. Market trends. Analyze occupancy rates, tenant preferences, and demand for specific property types or amenities to understand rental dynamics. Seasonal trends. Recognize seasonal variations in rents as certain times of the year may see higher demand and rental rates. Monitoring property price trends. Historical price trends. Examine how property values have changed over time to assess market appreciation potential. Sales comparables or comps. Compare recent sale prices of similar properties in the area to evaluate fair market value and investment opportunities. Capitalization or cap rates. Analyze cap rates, which measure net operating income relative to property price. Lower cap rates may indicate higher market demand, while higher cap rates suggest potential undervaluation. Price-to-rent ratios. This ratio helps assess whether properties are priced appropriately relative to rental income potential. Example. By comparing historical rent growth rates to inflation and wage growth, investors can evaluate whether rents are likely to continue increasing, stabilizing, or declining. How small apartment investors can analyze rent and price trends. Track rent trends in the target market. Gather historical data. Use online platforms like Zillow, Apartments.com, or CoStar to access historical rent data. Local property management companies may also provide reports. Compare rent growth to inflation and wages. Assess whether rent increases align with or exceed inflation and wage growth to determine if trends are sustainable. Evaluate occupancy rates. High occupancy rates indicate strong tenant demand and support continued rent growth. Analyze tenant demographics. Consider household incomes, employment sectors, and lifestyle preferences to predict future demand for rental properties. Monitor property price trends. Review sales comps. Compare recent sales of comparable properties to estimate property values in the target market. Adjust for differences in location, size, and amenities. Analyze historical price trends. Examine how property prices have changed over time to gauge market appreciation and investment stability. Assess cap rates. Calculate cap rates for comparable properties to evaluate investment potential. For example, a 5% cap rate may indicate a strong market, while a 7% cap rate might suggest higher risk but greater cash flow potential. Integrate rent and price trends. Price-to-rent ratio. Divide property prices by annual gross rental income to determine if a property is reasonably priced. A lower ratio suggests better investment potential, while a higher ratio may signal overvaluation. Projected cash flow and appreciation. Combine rent trends with price trends to estimate potential cash flow and long-term appreciation. Ensure that projected returns align with investment goals. Alright, let's dive into identifying investment opportunities. First up, emerging neighborhoods. Look for areas where rent growth is picking up speed and property prices are on the rise. These often signal emerging opportunities. Next, keep an eye out for undervalued properties. These are properties with strong rental potential but lower than average prices. They offer room for appreciation and cash flow growth. And lastly, value-add opportunities. Target properties with below-market rents that can be improved or repositioned to increase both income and value. Use tools and resources for analysis. Rental market reports. Access reports from real estate firms, property management companies, or government agencies for market-specific rent data. Market analytics platforms like CoStar, Yardi Matrix, and Rentometer provide detailed data on rent and price trends, helping investors compare properties. Property management software. Tools like Buildium or Appfolio can track rents and expenses, offering insights into income trends and property performance. Example: assessing rent and price trends for investment. An investor evaluates a target market and finds historical rent growth. Rents have increased by 4% annually for the past 5 years, outpacing inflation and wage growth. Rent-to-income ratio. The average rent-to-income ratio is 25%, suggesting tenants can afford current rents with room for further increases. Sales comps. Comparable properties are selling for $150,000 per unit, with an average cap rate of 5.5%. Price-to-rent ratio. The price-to-rent ratio for the market is 15, indicating properties are reasonably priced relative to income potential. Based on this analysis, the investor concludes the market has strong rental demand and reasonable property values, making it an attractive location for acquisition. Analyzing rent and price trends is vital for apartment investors to evaluate rental income potential, assess property value trends, and identify investment opportunities. By tracking historical rent growth, comparing price trends and cap rates, and evaluating rent-to-income ratios, small apartment investors can make data-driven decisions that align with market conditions and investment goals. Leveraging tools and resources for market analysis ensures that investors can adapt to changing trends and capitalize on high-potential opportunities.